When you think about how money moves, you probably picture banks, credit cards, wire transfers, or maybe even government systems. These are the visible institutions with clear rules and oversight. But what if I told you that the most powerful financial network in the world, IS&T, any of those things? What if the true engine of global money doesn't appear on traditional balance sheets, doesn't follow banking rules, and doesn't exist in the institutions people trust? What if trillions of dollars move every single day through a network that most people will never hear about, never see, and are never taught about in school? This isn't a conspiracy theory or some kind of fiction. This is the hidden financial network that quietly powers global trade, government borrowing, corporate liquidity, and even the survival of major economies. And today, we're unveiling exactly how this system works, it formed, and why nearly every financial crisis exposes it before it slips back into the shadows. To understand this hidden network, we need to go back to the second half of the 20th century, a time when the world's financial architecture was being reshaped faster than regulators could react. After World War II, the global economy entered a period of explosive growth. International trade expanded, corporations grew into multinationals, and countries needed access to foreign currencies and short-term funding. Traditional banks were just too slow and too restricted to meet this new demand. So, financial institutions quietly began building alternatives, a parallel system for moving money across borders quickly, invisibly, and outside of traditional regulation. This parallel system didn't rely on deposits, savings, or physical branches. It relied on contracts, wholesale funding, offshore financial centers, and later, digital financial pathways. By the 1970s, the Eurodollar Makata system of US dollars held outside the US had exploded in size. Banks in London, Singapore, and the Caribbean were lending and borrowing dollars completely independent of American regulators. This was the first major component of the hidden network. It was a system built for speed, built for flexibility, and built for institutions, not for the public. But it didn't stop there. Through the 1980s and 90s, globalization accelerated. New players joined the game: hedge funds, private credit funds, offshore subsidiaries of major banks, money market funds, and large institutional investors. These institutions didn't just want to move money. They wanted to move it without any friction at all. So the hidden network expanded. It grew into the repo market, where institutions conduct overnight borrowing using assets as collateral. It absorbed swap lines and derivatives, representing trillions in contracts. It created structured finance vehicles, off-balance sheet lending, conduits, and all sorts of shadow banking mechanisms. And it established complex dollar funding routes for foreign banks. None of this required traditional deposits. None of this required traditional regulation. The result was a global, invisible plumbing system that allowed trillions to flow instantly between institutions. It became the very bloodstream of global finance. By the early 2000s, this network was so large and so interconnected that even regulators admitted they didn't fully understand its scale, and that ignorance would soon lead to disaster. In the mid-2000s, the global financial system looked strong on the surface, but underneath, the hidden network was overloaded with fragile assets, mortgage-backed securities, short-term funding obligations, and complex derivatives. The entire system depended on one thing: confidence that collateral was safe, that borrowers could repay, and that money would continue to flow freely. But in 2007, the cracks began to form. Housing prices fell. Borrowers defaulted. Those mortgage securities became toxic. The collateral lost all its credibility. The hidden network began to freeze. Repo lenders refused to renew their overnight loans. Money market funds panicked. Shadow banking entities collapsed one after another. Lehman Brothers fell. AIG required an unprecedented bailout. The global dollar funding system evaporated almost overnight. Governments around the world were forced to step in, injecting trillions to keep this hidden network from collapsing entirely. The 2008 crisis wasn't just a housing bubble. It was the near failure of the global shadow funding network that had been moving trillions quietly through the world economy. In the aftermath of the crisis, politicians promised strict regulation, transparency, and stability. But they underestimated one crucial thing. The world economy needs this hidden network. Governments rely on it for liquidity. Corporations rely on it for cash flow. Banks rely on it for their overnight borrowing, and foreign countries rely on it for access to US dollars. Traditional banking alone simply cannot support modern capital. So, instead of shrinking, the hidden network grew even larger. Money markets expanded, private credit funds exploded, repo markets surged in volume, and derivatives markets ballooned. Today, depending on how it's measured, The global hidden funding network moves between $5 trillion and $20 trillion per day. That's more than the GDP of most countries, every single 24 hours. Despite some reforms, several fundamental problems remain. First, the network is not technically banking. It uses contracts and securities, not deposits. So traditional banking laws just don't apply. Second, much of it happens offshore. Regulators can't fully control what happens in London, Hong Kong, the Cayman Islands, and Singapore. And third, it's simply too essential to shut down. If the hidden network stopped functioning, global finance would halt instantly. The system continues because it must continue. Its fragility is tolerated because its speed is invaluable. And the same vulnerabilities exist today. In 2019, the US repo market collapsed overnight. In 2020, the COVID pandemic exposed severe fraud, and central banks printed trillions just to keep the network alive. In 2022, the UK pension system nearly collapsed due to derivative-linked funding structures. In China, shadow funding networks have fueled, and then destabilized, the real estate sector. Different year, different markets, but the same underlying weakness, a hidden global system reliant on confidence, leverage, and constant liquidity. So, let's sum it up. First, the hidden funding network is now larger than traditional banking, and absolutely essential to global finance. Second, nearly every major financial crisis is tied to this system, not the one we can see. And third, the world cannot shut it down. It can only try to manage its instability. We live in an economy held together not by the systems we understand, but by the networks we don't. And the next major global crisis may not begin in a bank or a stock market. It may begin deep in the hidden financial pathways moving trillions, quietly, every single day. If you want to uncover more about hidden finance, global corruption, and the secret systems shaping world power, subscribe to our channel. Because understanding the world means understanding the shadow systems behind it. Thanks for watching.